Good morning, good afternoon, good evening, wherever you are. London session. So, we took a look at the market yesterday. We wanted to see how the close was. We actually mentioned if it closed pretty bearish, that would be a bit of a problem because I believe we were trading quite high on the previous stream. Well, actually, I think I was talking about an altcoin, possibly. Anyway, um, we are into, let's go to the chart we were using yesterday. We're going to take a look at Bitcoin, a trade I've just opened on Doge and maybe Ethereum. Okay, so we wanted that dip. Okay, we got the dip there. Well, I mean a dip. And we were looking at. Let's bring in the session breaks and then we go to the daily and see how that's closed. So, what is this grey level? Okay, now that is an important level because price has pushed into it, closed as an SFP behind Sunday's high, the weekend, sorry, Monday. No, sorry, the weekend's highs. This is Monday range. So, first off, what is the grey? The grey is the mid range of December's. Um, I keep looking at that chat box where you're talking, seeing that word sausage on. Yeah. Oh, back in. We're back in the room. So this is December high. Let's get it in there. December high. It's just going to be a quick stream just to go over everything. We've got another one in New York. Make sure we get everybody in today. December high, left. And then these are important. These previous months, previous weeks, previous days ranges. Okay, they're the only ones we use. Previous month, previous week, previous day. Okay, we don't really care too much about October's high low. It's useful if we've taken it out. If we sweep one of the highs, we're like, well, that was a key area for liquidity. Maybe we can get a reversal trade. But in terms of the mid range or having a framework for your current month's trading or your current week's trading or your current day's trading, I only go as far back as yesterday for the reasons that Tom Dante uses, which is price recency. It's more I mean, more recent price action is more relevant to today's, right, to the present moment than a year ago. So December high, copy that, boom, and we bring that down to here, which is December low. It's a nice clean chart, isn't it? Look at all them lines. Ooh, we've messed one up, haven't we? Bang, there we go. Who has OCD like me? Anybody? I had it since I was a kid. Used to line up all my clothes in my wardrobe and my pencils on the desk, and my mum would be like, "What are you up to?" Now I have to have everything in order. Hmm. Right, so where were we? So the mid-range. We have December high low. Now, the way we use these is simple enough, really, right? The ranges. We don't need to go over them too much, but simply if we're in this top 50, we look for swing high. In the lower, we look for swing low. And obviously we've pushed up into that range. If we start breaking down and we do start clearing some key levels, okay, then we would look for a positional swing into liquidity, okay, because eventually one of these is going to get hit, December low or high. We ain't going to go sideways forever. So at the moment we're below the mid range. Doesn't mean we're bearish. We're at the high of that range, or this lower range. But it just means to be aware that it could reject here, and if things do turn bearish, we'll reverse our targets lower. I'm not even looking at December high for the moment. We're looking at other things, probably Monday high for the next couple of days. But that's where that grey level comes from. Now, it's acting as resistance at the moment. So let's bring in Monday's range because we'll need that for the rest of the week. Just clean that up. My cat has just climbed on my desk and is trying to play with my mouse. She picks the best times in the world. Right, what we got? Monday high. I literally never plays with my mouse. So if this Doge trade goes wrong, it was her fault. There's the excuse, isn't it? The market was wrong, and it was the cat's fault. Monday low. Okay, so H4. Oh, just to reconfirm, look, that ain't a good close, really, right? It could be a trap, but you're looking at it going, I see you typing. Have we still got video? Yes, okay. Okay, so um, we've got Monday high, Monday low. We've swept the weekend's highs and actually closed as an SFP. And now this could be a little problem. There could be a little dip. There could be a dip, right? But it could be a trap. It could trade into the wick. Now it's cleaned out all the book. H4. Now we went over this previously because it don't look so bad on the H4, and of course it won't because daily obviously looks a little bit different. But the most important thing here to note is that we did break out of this. We have only just broken out of this range, which was in here, right? Price consolidated. Then we had that series of lower highs, and we broke out. We've only just broken out, so we're expecting at least a pullback to retest the pink level on the backside, and then um, we'll see if there's strength. Otherwise, it will fail. And if it fails, then we're obviously then we can go back to the daily and say, well, there was an SFP time to short. But until then, it's confirmed as an SFP, but not enough to just blindly short it because we are above a key level. Okay, we need to see how it reacts at the key level if it retests it. So long, okay, long. It's not enough to be completely bearish on an SFP. It never is. You need a bit more, and especially with the context. Context is everything. The story of price has happened here. Here was the breakout. You expect breakouts to or you expect markets to trend in the direction of the breakout. You just assume, right? And then if you're wrong, that's when you flip. And then that's when it becomes a failure pattern or a deviation or whatever you want to call it. But we went for a little plan yesterday, which was a dip and then a dip into what? Oh, the weekly open. But it's retested the weekly open again for the second week. So last week it retested it down here, and we were entering longs. We were wanting to enter longs, and it pulled back, bounced, and now it's sort of topped out there. It has broken the structure. If we look at the line graph, you can see. Let's clean this up because I'll redraw that, and the plan pretty much is the same, but I just want to discuss what happens if it goes lower. Lower high, higher low. Sorry, higher low because there was the breakout. Higher high, higher low. Here would have been the next low. Higher high, higher low, higher high. It's broke it, okay, with an SFP. So it could break down, fill the gap. Absolutely could. We'll be well positioned for it if it does. Now here would be the trade to take short. It would be aggressive, but it would be based upon, it would be anchored off the daily. So let me bring the candles back. Now we know we've got an SFP and we can see it's now trading into last week's high. Is that level on the H4? Or sorry, what time frame we were on? H1, that'll do. So we're hugging that level currently, which is there. Let's get that in. And we are still within Monday's range. We have Monday low there, which is clean highs, clean lows. We're above the weekly open. Now, if we get something like, because like I said, we have broken structure. If we get today's high is up there. So if we drop that to the M15, they look like equal highs. Yeah, they do. So they are, rather. Let me get rid of that for the moment. You see these two equal highs that have been left on today's price action? If we trade into them, okay, and spike, because what you need is a double confirmation, don't you? You don't want to just rely on one thing when taking a trade. You can't just buy support. You can't just sell a SFP. You need two, three, as many confluence as you can. Now, if this moves up, spikes them, and you get a rejection, okay, we just sell immediately, and we look for first target, Monday low, and then gap fill. Okay, it will be an easy sell if it rejects. Okay, if it pushes up, hits the equal highs. Oh, and that would be the TP2. Okay, clear. Long would be now. Really, it's spiked lower. It's consolidated. It has broke, I believe, structured to the upside. Which would be here would be the low. So it's taken out the lows there. It's actually broken the highs there, right? Um, so it would be now, but I don't like the position because there's not a deep enough spike, and it has left these little lows here. So it's in a range. It's not a long I want to take, but if it goes up, it has every reason to go up now. And so if it does swing up, we want to see it hold. We don't really care, but if it goes up, holds, then we'd be able to buy. It would confirm this low, stop loss, and we'd swing that into at least Monday's high as a first target. If it pushes up and fails, then we short. We're in a great position for a Tuesday. All clear? Ethereum. Ethereum. Yeah, okay, good. Ethereum, again, nothing. I don't think that looks bearish. And it didn't close with a strong SFP. It didn't close with an SFP at all, in fact. So I'm thinking maybe, Bitcoin could sorry, Ethereum could drag the rest up. It could be the strong close that the market needs. And look, not as every SFP plays out. They just don't. I mean, you had one there, look, right? You had one there, bang. SFP looked terrible. How many people went short there? Probably a lot, but you were above a key level. And then there was another one, boom, and it took out all the highs. Did it follow through? Absolutely not. It's above a key level. Swing, okay? So, I mean, even here, you're above a key level. Actually, that one did play out, but you'd have been waiting a long time, and it looked a bit dangerous, and you wouldn't have got a lot out of it. It didn't even hit the lows. But this is just in the range. So, yeah, I mean, here, here would be a good example too. I mean, SFPs on their own, ignore them. You need more confluences. Okay, it looked like it was going to break down, rip, and then it dropped. Um, if we're looking to, and like I said, we're above key level, so that's important. We're sitting above December open. Hopefully, we're going to get a swing into that, and if we do, we're going to be ready. Because as we mentioned previously, that would be our uh, what am I looking at? Oh, Ethereum. That would be our hedge. Would be. Let's get rid of that. I thought I had it on a. Yeah, it would be somewhere. This is the level we're targeting, aren't we? Targeting everything in there because that is the low, and then we're looking to hedge for maybe a pullback, a deeper pullback, and then maybe go again, maybe. But our plan for the week is to long hedge. Okay, nothing's changed. Now there's nothing for me on Ethereum. We'll just let that play out for the day and see how that does. But I've opened a Doge long. And I don't know if I've been filled on that yet, but let's come to it. So yesterday we spoke about it on stream, and we mentioned this KSR, which is not actually just KSR, it's previous weekly high. So it's taken it out, closed above, retested it, and it looks all right. Now, if it closes like that today, I believe it will swing. Okay, but we need the low to hold because that's where my stop loss is. Now we drop this to the H4, you can see again, and we marked this out yesterday. It was at the highs, and we said, you know what? We want to pull back to this level. If we're lucky enough to get it, it's a KSR. Pulled back, bounced, and then swept all the lows. Okay, it didn't go as far as there, but it doesn't need to. It swept enough, closed above. Nice swing fail above a key SR. And this is the first breakout and higher high, higher low. We have to be of the assumption that a higher low is going to form. Here was another higher low. Okay, we have to be of the assumption that one is going to form and we're at the bottom of it. It's the only way you can make money going long, right? You need to assume lows are going to hold. Why have I taken the position that I've taken, and why have I taken the entry that I've taken, and why am I only targeting up there? Well, just in case that Bitcoin SFP plays out, I've decided to take a low time frame trade on Doge. Now the one I'm taking is this one. So the reason for the target is, look, it can go up there, but I don't care if it does, because if it does this, okay, I'm not sad. I'm very fucking happy because I've taken money there, and we now have a new area of price discovery, at least for January, right? So we get back in, and then we look for H4 targets, which are here. Here was where all the selling happened. Market sold off. So I'm looking for that, which ain't a lot. All it would be, really, would be another lower high, right? We had a big rally there. We're in an accumulation period here. We're not asking for a bull market. We're just asking for a bounce and a lower high. And there is a lot of resistance in there. There was the distribution. Okay, sells off. We're hoping that this we're banking that this is the inverse to this. Distribution, accumulation, mark down, mark up. Simple, okay? Now, simple, he says. Trading is easy, he says. Now, if we come back to the M10, um, we took out the highs here, so we had liquidity breakdown. Okay, here was the break in structure. Okay, and then it collapsed in the overnight session. And that doesn't make it bearish, but it could be. But the way we pushed up and then went bosh straight into all these lows over here, here, didn't quite take out previous low of the day, but it doesn't need to. That's the current low of the week. It doesn't need to come all the way back here if it doesn't want to. And that is a nice enough spike whereby it actually did retest the weekly open, which is in there. So it's a weekly open retest. So I'm of the assumption that the low is in for the week, and if it's not, I'm wrong. Simple. So where is the weekly open? Oh, it's not that one, is it? It's not. Is it that one? Yes, this one. Weekly open here. Now the trade I've taken is here was the break, here was the SFP. So I'm using this candle as my risk entry, risk at the bottom. Hasn't broken structure, but if we were to, it's an aggressive entry because we're on an uptrend, so we can be aggressive at the moment. But if it was to break structure, it would almost already hit target, and you're not going to get that, right? I'm very happy to say, okay, this might be the low. Let's be aggressive. Entry, because I know where I'm wrong. Target there. Okay, 2R. Very happy with that for a day trade, and that could happen easily. And as I said, if it continues higher, good, get back in. But at least I don't need to worry about it continuing higher. If it's already put a high in, I can make some money, and then if it rejects, we go short. If it follows through, we go long again. So this is just an in-between trade, but it also could remain range bound, like for a few days, while it maybe distributes or maybe accumulates. So any questions? God, there's quite a few of you in here today. That's brilliant. There's not normally this many in. Always limit orders. Never market orders. Insanity. The price you pay for a market order is just outrageous. As soon as you make the plan, limit orders go in. If you're not if you set your alerts for when you want breaks in structures or different things like that. But once I've made a plan and I've posted it in the channel, my limit orders are set. I never post in the channel unless I've set my orders. Well, I mean, I posted one the other day with just a plan that if it broke structure, then we would set orders. But generally, I won't give it as a as a trade unless I've set the orders. Okay. Any other questions? Are we good? Thanks for joining. Bye bye.